Let's also welcome on board Prashant Tripathy, the MD and CEO at Max Life. He joins us on the show right now. Prashant, we understand that the company has released a report named India Protection Quotient. It mentions a gap in the protection business. Are there any particular cities where the gap is significant, or is the gap evident all across the board?
So basically, we do continue to look at protection gaps across India, but perhaps this is the first attempt where we have now data going down to city level, and like I mentioned to you, the gap exists everywhere. So it's not as if any particular city is doing phenomenally well. Yes, there is a range, and that range it varies. In some cases it is in 20s, about 5-6 cities are in 20s. There are 4 cities which are in 30s, and there are 5 or 6 which are in 40s. But the maximum score that a city gets is in 40s. Now I would expect that in a normal case scenario, these scores should run somewhere in the range of about 70 to 80%. So the gap on protection is everywhere. Now we have touched only 15 cities. Now India is a very large country, so imagine if we were to go to many other cities and do this analysis, the scores will be even lower. And the cities that come to my mind, of course, I mentioned about Bangalore, Pune. I was a bit surprised to look at Ludhiana. Ludhiana is way below, perhaps the lowest. So those are cities which have maximum potential, but even large cities, with the pace they are growing, will continue to offer a lot of potential for protection penetration.
Okay, so how is it that you at the company level plan to tap into the protection opportunity, and by how much do you see the share of protection business rise over the next 2 years?
So protection is one of the top 5 strategic pillars or initiatives of the organization, and we are working really hard to improve the protection share in our total new sales. At this point in time, for the first 9 months, our individual protection share is about 6.8%, and we are one of the top individual protection sellers. We are together working to increase this penetration every year by about 100 to 150 basis points, so that in 2 to 3 years' time, we are landing in the range about 11-12%. We believe that this growth is sustainable because exactly to the point that this survey has revealed, while people have multiple policies, but where they lack or where the gap exists is on protection. And to some extent it is also to do with awareness, knowledge, but to a great extent before 2015 it was a supply side constraint also. But I feel that industry has now come together, and most of the large players are working towards improving the protection penetration in India.
Right. The insurance industry growth has tapered from what has been during the note ban levels. Do you think the industry premium growth is now going to follow a much slower growth trend post the high growth period of the note ban?
We must remember that the growth that you see is on the base of last 2 years of very rapid growth. You may recall that since 2016, the industry has been growing very rapidly. The private industry actually last year for the first 9 months was growing to the tune of about 30%. So one would expect that the growth will slow down a little bit. I will talk about growth in terms of APE numbers. So this year the industry so far in first 9-10 months has been growing at the rate of 11%. So my sense is that as we go to next year, the growth rates will stabilize more in the range of about 13 to 15% for private players, and at a total industry level maybe 10 to 12%. In that context, Max Life Insurance, as I have been sharing, has done very well. We are growing around 22% for the first 10 months, almost double of the industry, and we hope to maintain this trajectory in view of the significant investments that we are making in growing our own channels. So we will attempt and endeavor to grow much faster than the industry.
Okay, good to have you on the show. Thanks much for that quick take on how the industry is shaping up.